Hello, folks. Welcome to Pro Trader Strategies. My name is Eric Wilkinson, and this is Spotting the Trade. I'm trying to get you guys to know what you got to have before you go. And what we're going to talk about today is the markets. I'm going to really talk about the economic data, see how that's impacting the markets, and then we'll find some option strategies that we can wrap around those directional assumptions we come up with. All right, so before we start off with that, let's talk about the economic data. Not really anything across the pond other than retail sales coming in a little bit better than expected out of Italy, coming in at 0.9%, expected to be a negative 0.4%, so much better than expected there. In the United States, we got the National Federation of Independent Businesses, small business index that really gives us a good gauge as to how the overall small business is feeling about the economy. It came in slightly lower than expected at 97.1, expected to be 97.4. So just a couple of tenths lower. Keep in mind, though, last month we did get a reading of about 99. So continuing to see that small business show some weakness in this economy, or at least showing some angst, wondering about how this economy is going to work going forward, probably because they're struggling with higher labor prices, higher costs of goods sold on some aspects of their business, and maybe even just the difficulty in getting in new inventory for those sales, because a lot of folks, when you go into their stores, they're having empty shelves, and the stuff that's on the shelves is stuff that folks really just don't want to buy. So they're having difficulty achieving sales in that aspect there. All right, so let's go over to the markets, see what's happening there. Data are not really going to be driving anything right now, but we have Bitcoin up here. The reason why I wanted to throw Bitcoin up here first is I thought we were going to march back to the point of control here and kind of settle down. This 50 Fibonacci I talked about in the past down here was going to act as support. I said, hey, folks, if you're really interested in getting involved, maybe a small nibble down here at around that 50 Fibonacci was the area to start buying, around 36,000. We've gotten a nice little pop up to 44-ish there, and now seeing some weakness after tagging on this simple day moving average. Myself, now waiting for a confirmation, which would be a red candle today, tomorrow. That would be a red candle that would confirm a topping pattern. That would almost be a perfect setup for like strategy number 4, which is Steve Primo's big strategy. It did tag it, bearish move. We are in a bearish pattern here, and I would look to get short Bitcoin right now based on the chart setups here. So risk to the downside in Bitcoin. Now, gold, we've gotten back up into that trend channel, bouncing right along it. As of right now, I talked about how it would act as support yesterday. Well, we peeled through that, acted as resistance. We peeled through that resistance back into the trend channel, so we could continue to see this march higher. Not a surprise to me, as I think that inflation is going to be something that really drives this. And if you get ahead of it, if there is a tantrum with the markets, because of the Fed taper. Remember, we have not seen the Fed have a balance sheet the size of what it has right now. So for it to unload that balance sheet means massive selling. That could cause the markets to start rolling over. Not necessarily so the case here in light sweet crude or crude oil. Nice to see a top and roll out of those 90s. That was really going to be causing some problems. I already talked about some of the higher prices in polypropylene, which is a byproduct of the gasoline distillate process, and that goes into basically all plastics. Well, that will make a lot of people happy, seeing some of those prices ebb a little bit with the rollover here now that we're seeing in crude oil. Now, I wasn't expecting $100 a barrel. I was expecting this to roll over and stay closer into the 60s. With the economy in flux here, could start to slow. We're just the economy is doing very well, and folks are driving. So that's the manufacturing sector, which is a major demand factor in crude oil, is doing very well, as we've been seeing all of the economic data points for manufacturing do pretty decent here. So that's going to be driving that price higher as well. Another thing with the balance sheet, think about this with the bonds here, folks. Bonds are going to start having price go down because interest rates are going up. We talk about that all the time with the teeter-totter effect. As interest rates go up, If interest rates go up, then the price of the bonds go down. Well, that bond price is reflected in your portfolio. So that's what is showing a value of your bond going down, and you aren't getting a bigger coupon payment for that either. So it is a bit of a painful experience. Now, we've heard some Fed governors talking about 7 rate hikes this year. Well, even if that's 25 basis points at a crack, we're talking almost 2% there in the Fed funds rate. What does that mean for the 10-year and the bonds? That means those are going to be at 3-5%-ish. Well, if your bond portfolio was reflective of 2% ahead of that, then we are going to see that price. If you had $250,000, 2 percentage points increase in that bond, it's going to be worth less than $200,000 after all of that. Asking what is the best indicator? I like to use these, the point of control and all of the market profile here on the side, which is this blue area. That tells me where the psychology of the market is, really, where folks have found price to be value. And with that being said, bonds right now is saying 160 is where the time value is, meaning that's where we spent a lot of time, and the volume where folks have traded or transacted the most is another point of control. Because if we think about ourselves when we're trading, if you continue to see your price trading back and forth, you aren't as antsy to get in or out of a trade, right? You're not trying to get out for a loss or a profit, and you're not really trying to get in because you feel like you're going to miss that price. You haven't seen it trade. Well, that's the idea, is once it gets back to those levels, then it starts settling down. Another thing I really like to look at is the Fibonacci's and, of course, the 50-day simple moving average, as I like to look at that as a more of a shorter term directional bias. Being, if we're below the 50-day moving average, it has a tendency to tell us that we are in a bearish pattern, and vice versa. If we're above it, we're in a bullish pattern there. So long and short of it, Tushar, is I use several things that kind of give me the psychology of the market, which is really what I like to look at. If you want to check those out, make sure you're checking out our webinars, where I really dig into the devil of the details on some of these different trading indicators that I like to look at for these swing trades and stuff like that. So please check those out, Pro Trader Strategies. Also, before you go, make sure you subscribe and hit the like button right next to it. Also next to the subscribe, though, there is an indicator there that gives you an indication as to when I pop in here unannounced. So make sure you got that going as well. All right, that's about it for the bonds. Let's move on to the equities. We've got the Dow Jones Industrial Average slightly in positive territory, but for the most part, the better part of the day, we were seeing negative territory for most of the equities. Here we can see the Nasdaq. Not surprising, Nasdaq's not going to hold up, folks, as well as, say, the Dow Jones Industrial Average and the E-mini S&Ps. Why? Well, we saw that exacerbated move in the Nasdaq, and I've talked about this for the past couple of weeks, that with this correction, we were going to see more of a correction in the Nasdaq, as some of those high flyer names with the massive multiples that we weren't really even seeing historically were trading quite nicely through this pandemic. Well, we're coming out of this, and folks are starting to say, hey, you know, maybe Lululemon isn't going to be the thing that everybody wears for the rest of their lives. And some of those retail names starting to roll over. Things like Zoom starting to be beat up after that pandemic rally. So tech sector that did very well during pandemic, I think, is going to start to slump a little bit. We're even starting to hear folks talk about buying Peloton. You thought Peloton was going to buy everybody at one point in time. E-mini S&Ps pretty much unchanged. Again, something to note, though, we did have the topping pattern continuing to roll. Whether or not we can hold the 61 Fibonacci on a rollover is what folks are going to really be keeping an eye on. I would venture to guess anyway, that we're going to kind of settle down around this point of control, Tushar, as that is where price is transacted enough to where if it gets down to that price, folks are going to pull their hands back and kind of sit on their hands for a moment to wait and see what happens, because they're not going to be worried about those prices that are trading because they're so accustomed to seeing those. And then finally, let's take a look at the breakdown of the E-mini S&Ps. Pretty close to being an inside day for the most part for the last several days, just really consolidating here as what was, I was what I was talking about, we're going to see here with no economic data this week, other than just seeing the equities release earnings. That's going to be your only real true indication of direction right now. And it's such a mixed bag where we're seeing Facebook fall out of bed, the FANG stocks just kind of all over the place. At Facebook falling out of bed, Amazon just rally, or Alphabet just blowing the top off there. Those markets doing very well. So that's causing everything to balance out a little bit here. I haven't picked anything. Like I said, I'm waiting for a real discernible directional move here before I start really adding anything. My suggestion to folks would be laying in some covered calls right now as this market consolidates. If you're looking to add because of this correction, look to sell some puts. The volatility is really high across the board, so you'll be able to get great strike location for those opportunities that you want to add to a portfolio at good price levels. All right. I talk about that in my videos as well, or the webinars, I should say. So check out those webinars, folks. I really dig into each strategy and when, where, and why we would enter one of those option strategies for a given underlying. I have some guidelines that I want you to follow in order to increase your probabilities of success. That's all I got, folks. Other than if you can't take that, take it easy.